Nobody's bank account is safe. When the government tells you that your bank account is safe, it's because it's not. What's going to happen now, what's beginning in 2023, is going to be much worse. I mean, this is a much deeper financial crisis. But instead of a financial crisis, the Fed might trade it for a currency crisis and then a sovereign debt crisis, because they are going to just blow up, the money printing during this downturn. They've already started it. I mean, they basically returned the QE without admitting it. At one point, I forget what year it was, maybe the 1970s or so, one Zimbabwe dollar and one US dollar were at parity. So that just shows you what could happen. You have a whole graveyard of dead fiat currencies. They've all died. I mean, none of them survive. And I don't think the current crop will be any exception. The only question is, how much longer do they have? We're already paying double for a lot of the things at the grocery store. You look at certain prices and they've gone way up. But this latest round of bank bailouts is going to cause tremendous inflation, because where is the Federal Reserve getting the money to bail out all these banks? President Biden made a big deal about reassuring the public that, the taxpayers aren't going to have to pay for this. Well, technically, I guess it's not taxes that are going up in the traditional sense. It's inflation that's going to go up. These bank bailouts aren't free. They're not going to be paid for by the banks themselves. They're getting the bailouts. They're not going to pay for it. It's the American public that's going to pay for it. But the way they're going to pay for it is through inflation, because the Federal Reserve is going to have to create out of thin air trillions of new dollars and add it to the money supply. It's going to give the dollars to the banks, and the banks are going to give the Fed their treasuries and their mortgage-backed securities, except they're going to give the Fed maybe 60 or 70 cents worth of treasuries and mortgage-backed securities, and they're going to get a dollar, right? They're not going to get the market value for those securities, which is what we would get if you or I were dumb enough to buy U.S. treasuries, 20, 30-year treasuries a year or two ago when they were yielding 1%, and we wanted to sell them. We could only get maybe 70 cents on the dollar, or 60 cents on the dollar. But the banks that were dumb enough to buy them, they could get 100 cents on the dollar from the Fed. But the Fed doesn't have any money. It's losing money itself. The Fed is getting bailed out by the Treasury because the Fed doesn't have any money. But then again, neither does the Treasury. So the Federal Reserve has to print money to give it to the Treasury to bail itself out. But all of this means that the dollars that we all hold, I mean, I don't hold them because I get rid of them as fast as I get them, but the average American has got dollars, and those dollars are going to buy a lot less as a result of these bank bailouts. So when anybody in the government or in the media says, oh, the government acted prudently, we've saved the day, we've reassured that your bank account is safe. Nobody's bank account is safe. When the government tells you that your bank account is safe, it's because it's not. And the reason it's not safe, it's not because the banks are going to fail. The government has already said, we're not going to let them fail. Now, that's a mistake. They should let insolvent banks fail. That's how capitalism works. And so the insolvent banks won't fail. They're going to be propped up with inflation. What that means is every single bank account in the country, even the people who are banking with solvent banks, their accounts are going to lose tremendous value because the money in their accounts is going to lose its purchasing power through inflation. So no bank account is safe. Everybody with a bank account is going to experience substantial loss of purchasing power. And so the smart thing to do is to withdraw your money from the bank. I mean, your savings, you got to keep short-term there to pay your bills, but money that you don't need for a year or 2 or 5 years, whatever, don't leave it at a bank because you're guaranteed to lose because prices are going to go way up. So you should pull your money out of the bank and do something else. Buy gold, buy silver. That's a better savings vehicle. Or invest, get into stocks. I buy foreign dividend-paying stocks for my clients, value stocks. Some people buy real estate, but what you can't own is dollars or, a bank account because you're going to lose.